Good morning, traders. It is Tuesday, July 24th. Taking a look at the morning charts, we've got the US dollar index, and here you can see this is a 4-hour chart of the US dollar. Zoom back a little bit, and you can see here we had a previous pivot high in the US dollar a couple weeks ago when it tried to make a breakout. It did make a breakout, and then it gave it all back, and we saw a sharp reversal going into the Friday where it just kind of sold right back down, and we saw stocks put in a bottom. Now since then we've seen more or less a nice bull flag. Price has gone up, and the bull flag has just kind of worked its way lower, and then this week we're starting to see it pick up speed and test these highs again. Now yesterday morning we saw it push up, started to make a new high, ended up closing back below that level, so this is a pretty key resistance zone. That being said, we've had a nice push up there, and we're forming a tiny little, almost like a mini cup and handle here over the last more or less week and a half, 2 weeks. And what it's doing here is trying to eat through this resistance zone. It had another little push up this morning to break it. So I do feel as though it really still wants to move higher. And once we do break this level, I think we'll be off to the races, and we'll see the equities market sell off even more. Now looking at how things are affecting commodities this morning, again we've got a stronger dollar this morning testing those previous highs, and crude oil is doing pretty much the inverse. You see we've got this move down in the crude oil and this little tiny little kind of inverse handle here. It's very similar price action to the US dollar, just inverted. If you look at this chart, we've come down into a little bit of a support zone. We're into these previous highs over here, and of course this breakout level here where there was a little bit of a consolidation and dip, and then we got a little overbought, and we got that nice pullback from an overbought territory. So crude oil is looking fairly good here. Overall, the selling yesterday was pretty strong. It looks as though the market still wants to go lower, the commodities and stocks, because of the US dollar index. Zooming back a bit, let's just take a little bit of a bigger view here. You can see where it's trading. We've got this key kind of bottoming pattern, almost inverse head and shoulders. It's coming back down close to that neckline. It's right now it's trading back into this previous pivot high, which will act as support. And I do feel as though we could see prices actually sink down a little lower, right back down to these red lines here if we see the US dollar break out. Looking at natural gas, here's the 4-hour chart of natural gas. Last couple of days we've seen it stair stepping its way higher, and it's been holding up above a key resistance zone. A couple things to point out here. What we see here is simply we had a run higher, and if you look at volume, how it just diminishes and then you do get a sharp correction. Same thing here, you start to get stair stepping price action. It kind of works its way higher, volume starts to dry out, and then sellers step in, you get another sharp correction, and then we consolidated. This blue line here is the key kind of basing pattern. It's been consolidating through there for a while, which is good to see. In the last couple of days we've seen prices run up, and we're seeing volume start to diminish a little bit here. Wouldn't be surprised if we see another pullback down into the 290, possibly 280, but 290 I think would be more of a safe bet. We've got a key support zone across there. This pivot high, we had a congestion through there and a break above it, had another pivot high, broke through it, and then we had a pivot low. So it's going to act as a key support zone, and the way that the market is running here, it's kind of stair stepping its way up. Eventually we're going to see traders start to pull their money out, and we're going to see a downdraft probably down to the 3 or 290 pretty quickly. Looking at precious metals, here is the gold chart. You can see we're zoomed back here about a year, and we've got this huge kind of pennant or bull flag forming. Overall, we're starting to get right into the apex here, where we're going to get a breakout either way. Once we do start to get a breakout and there's some volume behind it, I do feel as though we could see a fairly sharp move. At this time, it could really go either direction. Overall, the big picture is to go to the upside. If we just zoom out a little bit more here, you can see the overall trend in gold. It's been working its way higher. A breakout to the upside would be very bullish and would take us up into the 2000 ranges after we eat our way through each of these pivot highs here, which will act as resistance. But overall, still a bullish picture. One thing to be concerned about, the longer something goes into the apex, the more bearish it actually becomes. So usually you'll see it go about 2/3 of the way of the pennant formation, and then you want to see it break out. The fact that it's kind of been going in, working its way into there, to show there's a lot of indecision, not a lot of confidence behind there yet, and so it does have me a little bit concerned. The short-term price action here, we have had a strong downdraft, and this type of little price action here actually looks to me like we might actually see it squeeze a little bit lower, which is fine. I actually drew these lines a long time ago on a chart showing that we could possibly squeeze to a new low, which falls in line with how it works, and that's going to shake a lot of players out, and then from there we could see a very strong move. And that's what happens a lot of times in a bull flag or pennant formation. Right at the end, it'll just slowly continue to slip and really run the stops, shake everybody out, and from there it will explode to the upside. So I wouldn't be surprised if we see lower lows on gold and silver still before it actually bottoms out, which falls in line with what could happen with the US dollar. US dollar may continue to head up, stocks and commodities sell down for a few weeks, and we see gold just kind of drift its way lower. Hopefully on more or less the initial break of this low will be on high volume, but overall it should be on lighter and lighter volume as we start to make new lows. Looking at gold miners, here's the gold miner chart. This is zoomed back to a couple years. You can just see how choppy it is, how it's kind of made a top here, eventually broke down. It's started to pick up speed to the downside. I wouldn't be surprised here if we actually see this kind of breakdown, and this bounce looks as though it could actually continue to go a little bit, quite a bit further actually, and pick up some speed, bottom out with the overall stock market, and then probably see it start to have a very strong recovery and work its way higher with gold and silver if they eventually do make their way up. But it looks as though this chart here is pointing to still lower prices and another wave or possibly two down before it actually bottoms out. Looking at silver, here's the 4-hour chart of silver. Very similar pattern to gold. We're in this long bullish somewhat pattern, getting right into this level here. Just drawing a quick, you can draw a couple different lines across here. Overall we've got a downward kind of channel like that. So silver could end up dropping quite a bit more. Silver is much more volatile. We do have this key support line here. If that is broken, I wouldn't be surprised though if we actually see it do the same as what gold does. It'll break down, kind of stretch to the downside a bit, and then from there possibly explode to the upside. Overall, silver doesn't have as clean of a chart. It does have a nice support line here that has been holding up, but usually clean support lines usually get broken. Just like this downtrend line, you see it appears, it kind of blows above it and then gets rammed back down and sells off, really shaking the market out. It'll do that to the downside also. You'll see it pierce, break down, get all the bulls selling, and eventually see it bottom out and take off to the upside. Right now I'm neutral on gold and silver. I really want to see how they're going to start to unfold here, see what the price action does, see what the volume does, and how it reacts with what the dollar is doing. So right now they're just continuing to consolidate here, and if we do get a breakout to the upside, I think there's great potential for both of them to make some new highs in the coming year. Looking at bonds yesterday morning, I pointed out they were a little overbought. They had pierced this previous high from back in June, and they were overstretched and starting to go kind of parabolic, straight up candlesticks the last more or less 8 hours before I pointed out that looked toppy. Now we're getting a nice little bull flag. It's consolidating. It's coming right back into a pivot top. So we're coming right back into these tops here, which are going to act as support. We also have this moving average, which is coming up. Now this price action is fairly bullish. Nice move to the upside, nice controlled kind of channel coming down. May see it even come down a little bit further, but overall this price action is pointing to higher prices. And the fact that we broke that high and we're just coming back to test this kind of breakout level, I would anticipate we see bonds continue to move up another, from where they are now, probably another percent anyways. Just looking at a simple measured move from more or less this low to here, you can see we've got a 1.5 point percent move to the upside. So looking from where we are right now at 4%, could go see it jump up to 5.5%. Which this is just a percentage scale. Usually the market likes to move in 1% increments. Bonds is a little different. SP 500 likes 1% increments, which is why I like to do percent scale down the side. And I find it more useful for trading. I don't really need exact prices. I just want to look at price action and volume and how far it's moved and how quickly it's moved, and I use that for adjusting positions and figuring out when things should top out. But overall, if bonds go up, that means stocks and commodities are likely to sell off. So we're still looking at lower prices in the next couple of days. I think. Remember, each candle here is 4 hours, so there's only really 2 candles per day for regular trading hours. So we do have some time, I think, for the market to continue to consolidate before heading lower. Looking at SP 500 daily chart, you can see we've pulled down to the bottom end of the range. If we just draw a quick support trend line, you can see we're trading right down at the bottom end of this range. It's starting to move a little bit below that this morning. Overall, we do have these moving averages, or not these cycles here starting to bottom. The momentum is trying to hold up, and I'd like to really see the yellow in this green cycle start to top out here, and we see the market kind of trade sideways or up a little bit. And if we could see both those lines come back up here, overall trend I think is about to roll over and be fairly strong, and we'd be looking for a short position somewhere up here, and from there we'd see the market really tank and start to break down out of this pattern, which would be a huge move. Now overall, this consolidation overnight looks as though the market may still want to actually just head lower and really just break down and not give us that opportunity. We had a little bit of a bounce yesterday. If I actually just pull up the SP 500 during regular trading hours, let me just switch the time frame here. You can see you can see the price action we had yesterday. Big gap to the downside. Usually once you get a big gap like that, you'll see prices try and fade back up, and it filled about half this big gap here. We did get stuck into resistance, which is right through this previous congestion zone, right through the center. That's going to act as resistance. That's where it stalled out yesterday. Saw some sellers kind of jump in right at the end and pull prices back down. So we'll see how things play out. Overall, the market is trading a little bit lower. Let me just go back to 24-hour clock here. You can see yesterday's price action. We ended up closing right here. So we actually saw a pretty strong sell-off after the market closed. From the high just before the market closed to the low, we saw over 10 points on the S&P just be given back fairly sharply. In overnight trading, we've seen a little bit of a bounce, came back up to the closing price, started to roll over, and it's not looking very strong right now. It looks almost as though it wants to continue to head lower and sell off. So we'll see how things play out in the first hour or so of the market. Maybe looking to just take a small short position, because overall the daily chart does look pretty ripe for a strong move to the downside. Now usually when you break out of a pattern like this, you will get more or less a double move. So what I mean is, if you see like a measured move, like say this is the last kind of surge, you'll see a little bit of a flag. Next surge would be about the same distance here, whatever this distance is. It would be to the downside down here. But what happens is, usually when you break a big pattern like this and you start to break down out of an intermediate uptrend, you'll see a double leg to the downside. So for example, here is this move here, and usually you would see just that move to the downside, which would be somewhere around here. Well, you end up seeing double that move all the way down to new lows. So what we're pointing here is, we could end up seeing a breakdown. We could see a fairly strong move that goes about double that all the way down to almost test for a double bottom, and it could be a fairly swift and strong move. So that's kind of where we stand right now, waiting for the market to consolidate, which it's done it through overnight trading. Usually I want more consolidation through regular trading hours. Another regular day of sideways or a bit higher prices and on lighter volume, and then we'd see another big move down. And overall, we're just kind of in limbo here. May have to just limp in with a small position in case we get that sharp drop today or possibly even tomorrow. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.